Today's press conference is being held in conjunction with Your Money Bus Tour, which can be found at the website www.yourmoneybus.com. This is an initiative of the NAPFA Consumer Education Foundation, TD Ameritrade Institutional, and Kiplinger's Personal Finance magazine. This bus tour is going to tour the country from now until June, hitting 65 metropolitan areas, bringing some of the same messages to consumers that we're speaking about today. As we all know, the crisis in the mortgage and credit markets is presenting immense challenges to the national economy. Just as importantly, each American household has been affected significantly. Americans have watched their investments decline. To their shock and dismay, they've even seen some of the safest investments, such as money market mutual funds, become more risky. At the start of this tour in Washington over the past few days, it was held at the very same time that our nation's leaders were discussing some momentous legislation which is being voted on in the House of Representatives today. Will this legislation be enough? We don't know. These are truly uncharted economic waters. We don't know what the future will bring, but we suspect that we'll have some more surprises. We know that Americans are more concerned about their futures and their financial futures than ever before, and they're searching for answers. Fortunately, there are a few financial strategies that will work even in uncertain times. Here's a couple examples. First of all, build a nest egg in case of unexpected expenses that may come up. Start saving money now for retirement and for all other long-term objectives. And now, more than ever, ensure that your portfolio is diversified. The Your Money Bus Tour is designed to bring these truths into sharp focus. They remain true even at a time when they've been obscured by some very high-profile problems in the financial markets. The Your Money Bus Tour has three important messages. First of all, consumers must get out of debt. The savings rate in the United States has been actually negative for the past few years. People have used the rise in their home values and in some cases the rise in their investments as a proxy for actually saving money. The New York Federal Reserve reported earlier this year that consumer debt now exceeds $2.6 trillion. One of the nation's largest credit reporting agencies estimates that American households now have $16,700 in non-mortgage debt on average. In short, Americans need to become savers. Living within your means needs to be a message that everyone should take to heart, regardless of their annual income, their age, or their level of wealth. Secondly, consumers must become long-term investors. Once they have dug out of their debt, they must have long-term investments in a properly diversified portfolio, and this is the key to building wealth. It's not a magic formula, it's a basic strategy that can be adopted by anyone and everyone. Study after study has shown that buy and hold strategies work. This is especially true for average Americans making modest contributions to their 401k plans, their 403b plans, and other retirement plans on a regular basis. Third, we must have stronger consumer protection. The regulatory structure in the financial services industry has proven to be somewhat inadequate. The complexity of investment vehicles has outstripped the ability of regulators to supervise market activity. Similarly, the average consumer is not being adequately protected when he or she borrows through a mortgage or through credit cards. Although the NAPFA Consumer Education Foundation does not lobby for legislation, there are two measures in Congress right now that we can support. First is the Credit Card Holders Bill of Rights Act of 2008, which is in the House of Representatives and sponsored by Congressman Carolyn Maloney of New York. And second is the Credit Card Accountability, Responsibility, and Disclosure Act of 2008, sponsored by Senator Dodd. The bottom line is that most Americans are unprepared for retirement or for meeting some of their other long-term financial objectives. The current economic and financial crisis is taking many Americans even further away from meeting their goals. As the housing markets remain stagnant and investments also, it is obvious that the average American cannot wait for the rising tide to lift all boats. People need to take charge of their financial futures, and they need to begin to do this today.